Hello everyone. Welcome back to Under Radar Talks. Apple on Thursday reported financial results for the second quarter of fiscal 2024, which ended March 30th, 2024. The company reported quarterly revenue of $90.8 billion, down 4% year-over-year, and quarterly diluted earnings per share of $1.53. Additionally, the company's board of directors declared a cash dividend of 25 cents per share of the company's common stock, an increase of 4%. The dividend will be payable on May 16, 2024 to shareholders of record as of the close of business on May 13, 2024. The board also authorized an additional program to repurchase up to $110 billion of the company's common stock. Two pieces of news boosted the company's stock price. Apple's stock price rose 7% after the market opened on Friday, but as trading volume increased, the price began to fall back somewhat. The current stock price has risen back to mid-February today. So is this a good opportunity to buy? Let's take a look at the stock's latest ratings. 34 analysts have rated the stock in the past 3 months and assigned 12-month price targets. We see that buy ratings account for 55.88% and hold ratings account for 38.24%. Sell ratings account for 5.88%. The average price target given by analysts is $202.25, with the highest estimate being $250 and the lowest estimate being $162. Let's take a look at the stock's inflow and outflow data. Starting from April 19th, regardless of whether the price rises or falls, there has been a continuous net inflow of funds into Apple stock. Net inflows on May 1st were $316 million. Net inflows were $956 million on May 2nd. It is worth noting that there have been a lot of net purchases of super large orders in the past 2 days. Apparently, some investors have predicted that Apple's stock price is about to take off. Let's take a look at the current market. We saw that after a choppy day for the S&P 500 on Wednesday, the market finally decided to move higher. After the Federal Reserve released news on interest rates on Wednesday afternoon, the market surged and then retreated. At present, this action seems to be evidence of the entry of large capital. A weaker-than-expected jobs report for April boosted hopes that the Federal Reserve may soon begin cutting interest rates. The weak jobs report also sent interest rates lower, with the 10-year Treasury yield falling below 4.5%. At Wednesday's Federal Reserve meeting, Chairman Jerome Powell said the central bank was prepared to take action if unemployment rises. Friday's non-farm payrolls report showed that jobs rose by 175,000 jobs in April, below the 240,000 jobs expected by economists polled by Dow Jones. The unemployment rate rose to 3.9% from 3.8% last month, according to the Bureau of Labor Statistics. The wage data also came in below expectations, an encouraging sign for inflation. After weaker-than-expected job growth in April and slower wage gains, some expect a second rate cut before the end of the year. The market opened 1% higher today. Felt a little too much. While some major companies have posted encouraging quarterly results, investors should be wary of the strong catalysts in the market. The technology sector has strengthened across the board, with some technology giants opening up more than 3%. However, there is also pressure to continue rising at the current position. The market has hit the bottom twice and has formed a certain profit margin. This may be a good time for short selling. It is worth noting that some financial giant stocks are dragging down the broader market index. JP Morgan, Wells Fargo, MasterCard, and Visa are all falling, and technology stocks are also showing signs of retreat. There were a large number of transactions in Apple stock within an hour after it opened, but the price moved downwards, and it felt like funds were fleeing. The current price of Apple stock has returned to February today. This area basically remained sideways for a month, and then the stock price began to fall. A large amount of profit-taking has formed at the bottom, so there may be a lot of short-selling pressure here. When the technology sector is comprehensively creating recent highs, for short-term investors, it is not recommended to buy Apple at this time. Based on these analyses, we have identified a near-term resistance level for Apple stock at $190, where there may be significant selling and a retracement of the stock price. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.